Financial crisis, it seems it's once again in the making, the big reset. Where does India stand amidst all of this? We've got two of the finest minds in conversation here, Arvind, Subramanian and Swaminathan Aiyar. It's indeed our pleasure to be hearing both of them. I'm going to begin with something that Swami wrote early this morning. He said both the pessimist and the optimist seem to be making a case here, and they have a case here. You said yesterday that this is the big reassessment of the global financial markets. Why do you say so?
No, so let me begin by saying that, putting a twist on what Swami said, right? See, I think that on balance I want to come out and say that from India's perspective, the way I see this slightly differently from most people is that actually it's potentially a historic opportunity for India. And to understand why that is the case, you have to go back and understand, you know, what's happening, what's bringing on this trouble. I think what is happening is essentially two related phenomena, right? One is a fundamental reassessment of China's growth prospects, coupled with anxiety about whether the ability of China to respond to this crisis, which may be more limited than it has been in the past for a number of reasons. So one, reassessment of China and reassessment of Chinese ability to deal with this. Related to that is, it's also a more broader reassessment of the emerging market, bright emerging market growth story. And it's related to China because remember that a growth decline in China means that commodity producers will be soft all over the world. And that's why you see South Africa, Colombia, Mexico also being hurt. And countries that are in the Chinese production chain are also going to be adversely affected. Now, if you then step back and say, where does India stand? India is neither a commodity exporter, in fact, it's a huge importer, which means there's going to be a big positive impact. And in this case, for, you know, oddly for, you know, maybe for unfortunate reasons, not being part of the Chinese value-added chain is the other opportunity for us. And then there's a third thing, of course, is that remember that one problem with all these countries when they're thinking about responding to that is, you know, to spend more, for example, right?
That's right.
But in some sense, East Asia is kind of infrastructure addled. It's got infrastructure kind of coming out of its ears. So, you know, how many bridges to nowhere can you build? How many train tracks to nowhere? India that way also differs in that. So in that sense, once the dust settles and once, you know, this undiscriminating phase of the market ends and the discrimination phase sets in, then I would argue that actually India can distinguish itself as not just the very good emerging market, but possibly the best emerging market in this.
Are you as optimistic because you say this could well be a recession in the making? So is this reassessment, recession, is this a historic opportunity for India?
No, Arvind is going, I think, beyond the, he's saying when the dust settles. The question then is how and when will the dust settle? So the big question, I mean, I do agree. I mean, Arvind says it's an opportunity. I think it's another way of saying we have been underachievers for so long that our ability to catch up and achieve puts us in a special niche compared with some of the other guys around. But first, the question is, when will the dust settle and how? So I said in my article, there are two possibilities. First, that this is the start of a global recession. And there can be a lot of arguments to back that up. That's the Chinese sliding. It's going to pull down, as you said, Latin America, it's going to pull down Africa, pull down a lot of East Asia. Europe is in bad shape. You have just America showing some strength, but the question is, can America just be the buyer of last resort and save everybody else?
And can that be the single engine of growth anymore?
It has ceased to be for some time, and China certainly has become a bigger contributor to growth. So the first question is this the start of a global recession?
So I think that, you know, in some ways, global growth is going to slow down. And see, I've been saying this for a long time, that the puzzle about Chinese slowdown has always been not why it's slowing down now, but why it didn't slow down earlier. because no country has posted 10.5% for 35 years. So in some ways the slowdown, it's just that maybe because you've had so much of a build-up for so long, the correction is going to be in the short run perhaps more acute than than what would have been otherwise been a smooth slowdown. So global growth is going to slow down. So then the question is, and let's assume that that's a kind of semi-permanent feature, let's say for everyone. But there, remember, so there's going to be an export drag on India, and that's going to be the the drag from this on India, which is going to offset all the other positive factors. But even within that, I see that if the US economy grows, most of our services exports are to the United States. So there's going to be some drag on Indian growth, which is going to be the dragging factor. But there are lots of offsetting factors for India, and in a relative sense, and Swami, partly I agree with you that it's a consequence of underperformance, but I think partly it's just a structural factor of not being a commodity exporter. Not being a net commodity exporter, which is going to give us this opportunity, and not being too closely integrated with East Asia. So I think that yes, for sometimes a global slowdown, some drag on our exports, but lots of offsetting factors, and in a relative sense, I think we will look very good, provided of course we do all the things that we need to do domestically.
I want to ask you a question because you've written about this earlier today. Dr. Subramanian is pointing out there, Mr. Jaitley spoke about this yesterday, Mr. Sinha has been speaking about strong macroeconomic fundamentals. Why is it that they're not coming to our rescue when a crisis like this is taking shape?
Surely to some extent they have come to your rescue. You have suffered much less than all others, both in the stock market and the exchange rate. In fact, you might almost say it's a problem that the rupee has become too strong compared
to the rest of the emerging market
with some of our other fellow exporters. So Arvind, can we touch on this? That on the one hand you say macro, so the rupee doesn't weaken as much as the others, but all the others are now at a comparative advantage over you compared with 7-8 months ago. And the sad thing is that some like Turkey and so on, who have devalued more than 20%, their exports are falling. Even after massive devaluations, their exports are falling. So we seem, that's why I'm worrying about global recession. Normally, if you have a substantial recession, one country should be able to get out. If everybody is devalued, then you are in a trough and you can't get out. So both these questions. First, isn't India going to be relatively badly hit? Because we say our macros are better, but we take a bigger hit on the exchange rate compared with our competitors. And secondly, even if our macros are okay, but everybody else's is so bad, are we not all going to be pulled down?
Yeah, so see, let's take the first question. First question is that our fundamentals, prevent disruptive movements. Right, and that's what, and we've just looked at the numbers in terms of stock market and things. We're kind of a little bit middle of the pack. I don't think we've been as badly hit as some, but also we've had some depreciation, but maybe not as much as some of the Turkey, Brazil's been happening for some time. China,
Russia.
Now, Russia. Luckily, see on that, Swami. Luckily, for example, with Russia and Brazil, we're not.
We don't compete.
We don't compete because it's not exported things. So vis-a-vis remember, we are big in services. We are, we do a lot of, capital-intensive, high-skill manufacturing as well. So that's where I think the competitive impact comes in. So I think, provided we do the necessary things domestically, right? We can ride out this short-term, changes in competitiveness that's happened from these developments. I think we can ride it out because fundamentally, all the other thing is better. There'll be some, and we also remember we also have policy instruments to, we can choose how much the exchange rate should depreciate or not.
So first let me just focus on the extent of the problem of China. Ruchir Sharma, Morgan Stanley, is one who has been saying for two years, China's total net to GDP is 240% of GDP. He says there is no case anywhere in history where a country has not ended in tears with having this kind of huge increase in leverage. And of course he's chortling today. But the way he is putting it, he says this huge stimulation has created these large bubbles in the property and stock markets which are bursting. And when that happens, there is not that much a country can do to overcome it in the short run. The bursting has to result in a very substantial amount of pain. And then when the pain has got rid of the bubbles, then you can get up again. But in effect, he is predicting a significant period of pain before we return to normalcy. Do you think that will happen?
See, I think a lot of the Chinese slowdown is going to depend upon the policy response. Remember, see, Ruchir is right on the credit build-up and the consequences. No country did this. But remember, the big difference between China and all the other countries that built up credit was that they did not have $4 trillion in reserves to cushion the downturn, and many of them were current account deficit countries. So I think these two things are what always qualified the assessment of, oh my God, disruptive movement, all hell will break loose in China. So a lot is going to depend upon, so there will be, so again the key question in China is, yes, there's going to be slowdown, but is it going to be sharp and disruptive and then settle, or is it going to be relatively smooth? And I think that, to me, what matters really is that what is going to be the medium-term growth profile for China. And in my book as well, I was saying that, from now on, and this is a disagreement I had with Justin Lin, and Justin and others were saying this is going to go 7.5–8% from now on. And my view was it's closer to going to be between 4 to 5% over the medium term. And so I think it will be closer to that. And in some ways, I think that is consistent with, because Swami, remember that to me, a world economy growing at about, let's say, 3 to 3.5% is consistent with India being able to export a lot to the world economy.
There's something that Swami talks about as far as policy moves are concerned. I want to touch upon that and throw back to him, because he says that there is obviously very little appetite as far as political will for fiscal incentives is concerned. Monetary policy has not really produced the results. Export demand is shrinking on the world. What is the policy instrument that the world has to turn to? I mean, China just a few hours back has cut interest rates again, but what good is it? Can it actually boost growth?
I mean, to go back, China has cut interest rates 5 times.
I know.
True.
Right? And now it says,
and they've cut the reserve requirement as well.
And the reserve requirement. And it's, all I can say is this almost looks like a rather foolish way of saying, well, if a bubble is bursting in these markets, let me somehow recreate the bubble.
No,
because those were highly inflated markets.
Yeah.
So when bubbles are bursting, is this the appropriate kind of policy response?
Yeah.
And if I may add, what are we going to do?
If
If China is cutting all these, are we going to cut?
So I think that I think it's a fair question for to ask Chinese policymakers, because remember, conceptually what they're struggling with is that they know they have to get into the different model of growth, but getting there is proving difficult. So at every point in time, you want to hark back and rely on the old model. I think, except that this time around, their reaction cannot be as inflationary as it was after the 2008 crisis, because they don't have the ammunition, and I don't think they're going to reflate it to the extent that they did. So this is, to me, a way of my interpretation is that smooth the disruption. Whatever policy instruments we can, we try and smooth it, and that's what we do. So in terms of just think about India, for example.
Yes.
In all this, if you look at the Indian economy today, I think all the signs are that, at least from the data that I see, is that we are, even from a growth perspective, we're not doing too badly. And take the number that I monitor most closely, which is the revenue collection. You strip out all the new measures that have been taken, and it says that the underlying base for taxes is growing for the first 4 months, 1/3 of the year, is growing at about 14.5% a year. Now, even if you assume very high buoyancy, that's still very substantial nominal GDP growth. I think that, and all this is happening, remember, despite slowing exports. Exports have slowed down. And if you look at the credit numbers, retail credit, especially to consumers, are growing up. So essentially, the way I read the economy is that the economy is perking, has been perking up relative to the past. It's probably being fueled a lot by the consumer consumption. We're getting this huge tax cut in the form of oil price increases, and all of this will have to offset the drag from lower exports. So that's the way I see the economy, moving forward.
So,
he hasn't answered the
yes,
question that you
so to get away from it all,
what should Governor Rajan be doing?
I think you are really saying that we should cut interest rates.
Well, am I saying that?
I think you are saying that, if you want to keep going in a situation where these other problems are there and China is cutting the interest rate.
I see, in this I always, my view is that everyone has to contribute to this, government, the monetary authorities, the states, the public sector undertakings. I think we all have a role to play, in pursuing the right policies. I think that if you think that looking ahead, the real problem is deflation, and that we've managed to get inflation under control, then that has implications for how we should run monetary policy going forward.
I have a question on deflation, but Swami, I want to ask you, you've written earlier today that in the OECD countries, interest rates is near zero. It's like a gun without bullets. What about in India? I mean, he's not going to say it in black and white, but do you believe there should be an out-of-turn rate cut just to assuage and just to, smooth and fade nerves? What should Governor Rajan be doing? Or is he caught in a catch-22 because there is a deflationary threat that may be exported out of China?
No, there is a favorite thing that if you are worried about your currency, you don't cut the interest rate.
And right now,
if you want to stimulate so the question is, so we first have to settle the issue. Where do you think the Chinese renminbi is going, and are we going to be chasing that rate? I think that is the first question to be asked. Where do you think the Chinese currency is going? Because as far as I can see, we can't really afford to just keep appreciating against that.
See, where the Chinese currency, remember the actual depreciation has not been huge, right? Let's get that clear firstly. Actual depreciation now is what, 4-5% nominal. Okay. Now, remember that I have always been very strongly in favor of the world supporting the renminbi being included in the SDR basket for one very simple reason, and this speaks to India's self-interest, which is that once you get China into the SDR basket, that means the prerequisites are it has to progressively open its capital account.
Yeah.
And that means that the ability of China to, to kind of manage the exchange rate, especially by keeping it undervalued, it loses that ability.
Yes.
Okay. So think of what's happening in China as both anxiety about Chinese growth, anxiety about Chinese policymakers' ability to react, but at the same time, this big geopolitical thing to make the currency convertible and put it in the SDR basket, which I think will, on balance, opening up the capital account. So to cut a long story short, I think the Chinese currency, I don't think they wanted to really depreciate too rapidly, too much. I don't think they want to do that. I mean, there may be market forces that take it, but I think opening the capital account to China is still a good, especially if you get a big stock market correction, it will still attract inflows over the medium term. So I don't see a big, what I do see, of course, is that very aggressive Chinese monetary policy, right, which I think has a kind of similar effect to an explicit devaluation, and that's, I think, what we have to respond to.
But Swami, if China continues to play the currency card, will India be a mute spectator? Because the worry for Dr. Rajan right now perhaps is rupee and not so much inflation anymore.
No, Arvind doesn't seem to believe the Chinese are going to go for, you see, you have to get away from this technocratic issues of political issues. If you have a communist party which is panicking on loss of control, it can say, look, we try to stimulate by stimulating the property market with the stock market. If all of that is not fair, we said we need to stimulate these because we are not getting growth as we shift away from the export-oriented model to a domestic model. Somebody may say, this is failing, so let us go back towards the export-oriented model, in which case we have to depreciate sharply. I'm not saying this will happen. This remains, and this would be driven by politics. This would be driven by a communist party afraid of losing control of this whole system through a slowdown.
Yeah, and that is certainly a risk that remains. And if that happens, of course, then I think all bets are off, and I think everyone, I mean the whole world, it's not just India, but the US will then have to, we could...
Especially given how greatly invested China is in US Treasury. I have a question on...
But can I say, Swami, to that, if they go back to mercantilism and they open up the capital account simultaneously, then I think the ability to run mercantilism will also be to some extent undermined.
I have a question on the US, and when in 2008 the crisis was exploding, there was a very coordinated central bank action because US was also in deep shit, if I can use that word. US is far better off today, and they will perhaps not bother so much for a coordinated central bank action. Given that everybody's going to be looking at their own backyard, do you then expect central banks to be acting at their own whim, and that is perhaps going to lead to yet another crisis that is already in the making? A lack of coordinated central bank action.
I think that, you know, my experience with international coordination is that when there's a real serious crisis, I think broadly they get together to take action. I think in that episode, you know, everyone was in trouble and there was coordinated action. I think if something similar happens, I think, you know, you will get some coordination. I think moreover, I think more immediately, I think the way that will take place now is with the US Fed reassessing, you know, whether or not it should raise interest rates.
At this point, we merely have a slowdown. This global, with all this coordination will come if the slowdown becomes an outright recession.
Yeah.
Then these questions will arise. As of now, we are having a slowdown. The big question is, will it just be a slowdown which then recovers? In which case, this fall in the stock market is a fantastic buying opportunity. Everybody should be buying. It's, as we saw in the paper tantrum of 2013.
But I think, Swami, the more immediate question is what the Fed is going to do, the US Fed. You know, even under current conditions of it being a slowdown.
Do you believe that decision is delayed for good now? The decision to hike interest rates? I'm going to come to you.
Even if it is, I think it's less important. I think the real economy issue is that if there is a slowdown because of growth over, I mean, Hayek would say that with these changes in the interest rates and so on, you've been investing in the wrong places for years, and you're going to get your comeuppance in the form of a recession. If you carry that argument, that everybody is having 0% rate of interest and the Chinese are desperately inflating two bubbles, then you're going to have tears. But in that, but this is the key point I want to make, that in that global scenario, we do and will stand out as a place for attractive investment. Better?
Yeah. Better than the rest.
Yeah, better than the rest, yeah.
As better than the rest. But tell me this, suppose the bad scenario comes right.
Yeah.
Suppose you get these, a major slowdown, the Chinese panic, the USA is not willing to be the borrower of last resort. The Republicans say, we refuse to have large deficits, as we did last time, and be the global buyer of last resort. So suppose then we do get into a recessionary situation, or we are heading that way. What, in your view, should we be doing in that scenario? I don't want to trap you into saying that we must do this immediately. But I think if we then slide into a recession, then in your view, which are the three top things we should do?
No, I think that, you know, if we think that, you know, we're going to be in that kind of post-2008 kind of situation, I think, you know, in that situation, like all economies, you know, you have to bring out all the policy stops. You know, fiscal, monetary, exchange rate, structural policy, everything comes into the picture. You know, but to me, the more important question is that even if we are in this slowdown rather than recession question, you know, what can we do to convert this into a historic opportunity?
Absolutely.
Yeah.
And as the famous thing, don't waste a crisis.
Yeah.
So even if this is a mini crisis and not a full crisis, how do we take advantage of that in terms of our policy reform?
So I think whatever we're planning to do, we have to plan to do perhaps at an even faster pace. You know.
No, give me three priorities. You're being very
Talking
planned.
about crude and how we stand to benefit. Are we being a little sanguine there? Because I think we almost squandered the opportunity with low crude, which was there for about 8-9 odd months.
How did we squander it?
I mean, we didn't really make the most of it, is what a lot of people say, and now it's at 40. Are we being a little sanguine about low commodity prices and how they benefit?
No, I would disagree. I think we benefited it in two senses, right? One is that our macro stability owes a lot to the external thing, apart from all the actions the government has taken. And second, I think the fact that the growth numbers are looking, you know, perkier than you would believe looking at the global situation has to do with the fact that, you know, this is also acted like a tax cut and, you know, boosted, you know, consumption and things. So I don't think we've in that sense we've wasted that, and I think if anything going forward, that's going to, you know, impart even more momentum to us going forward.
Do you think at this point of time, it is only August now, within 2 months you will be starting to plan for the next budget?
They already are actually begun the budget.
Yes, okay, in some way. What then does one make of the fiscal long-term strategy? Do we say we need a pause in this fiscal strategy until this particular thing passes?
But I think, Swami, that would depend upon the extent of the slowdown. I don't think it will have to be data-driven. I think that, the default has to be we stick to what we said in this budget. That has to be the default. And, the public investment that, we've had in the budget, we have to get that, really ramped up, get it up to what we wanted, and generate demand that way. We have to, I think, address the balance sheet problem. I think that's something that we've spoke about the survey, and also the balance sheet problem is also related to problems in the power sector. So I think those are issues. I think if you can get the GST into play, that's I think going to be it's a major reform. The finance minister has said that we're going to do all our best to get it done as early as possible, because because remember, those are the things that signal that even in this midst of this crisis, the government is committed to acting on its reform agenda. And I think that's, you see, to the extent that there have been anxieties, uncertainties about a policy in this, once we capitalize on this, I think, historic opportunity and do that, I think we could be in quite a good situation.
Swami, the tricky political question is, could this be the opportunity or the window of opportunity that the government wanted to put the moral authority on the opposition to go ahead and let the GST through?
I'm afraid these things are not driven by morality.
There's far more political compulsions there.
Yes, no, they never have it. So that particular game will continue such as it is. Can you get it done without Congress? Maybe, or with some limited thing. Because at the end of it all, Congress does not have 1/3 of the seats in the Rajya Sabha. So the truth is that if you can get some of the other guys on board, it is possible to have this thing done without them. But I think to try to link the current crisis with the GST would be a superb piece of showmanship if Arvind can do it. It would be difficult to do it.
Yes.
Yeah, and I think I'm not trying to spin this, but my assessment yesterday and our discussions with the Prime Minister, I think the sense that that you see, because essentially markets are behaving almost as if all emerging markets are similar, and that's why you get this. But I think there is a real sense that we could distinguish ourselves as actually the really good emerging market, which has macro stability, which is committed to reform, at the pace that politics will dictate and allow, and maybe some political statesmanship will accelerate that. But if we can do that, this is really maybe a turning point in India for itself, but also in the global economy. I don't know whether you know this statistic. Something that surprised me, that I think in the latest year, India has contributed to something like 16 to 17% of the increase in global output at PPP prices. So the sense that we can break out and come of age in this is something that's a real possibility that this crisis can sort of highlight and maybe even galvanize us into action.
The one big difference though I see between the 2008 crisis and now is that policymakers in New Delhi are being proactive. They're talking proactively and they're perhaps discussing proactively than waiting for things to happen. Is that something that's right?
I would say we are, this is like one of the minor recessions of say 2000, rather than, this is not a mega thing like 2008. So if you get a recession, it will be of a much milder kind, which we have managed to tackle before. But it can be the kind of thing where if you are going to have an enormous flood of cheap imports, can you keep up a liberal policy, or will you have to say, I'm going to have huge anti-dumping duties, I'm going to increase my import duties? Because you are going to get a huge demand backed by the opposition parties. It will become part of the electioneering even, of saying, Modi is allowing us to be swamped by imports.
Yeah, but I think there
is that a discussion point just yet?
No, I think I think the Commerce Minister said this in public as well. I think that even regardless, over the last, I think, month or so, it's been clear that India will have to gear itself for Chinese responses to its slowdown, right? And I think anti-dumping, countervailing have to be part of the arsenal as kind of legitimate ways of responding to state-sponsored subsidization, private or thing, and therefore we have to crank up our administrative machinery, and that's, I think, has to be part of the arsenal. Apart from anything else we have to do, like exchange rates or monetary policy or whatever. That targeted action against floods, surges, which are artificially stimulated, should be part of our policy arsenal.
Swami, we're running out of time. We have time for one last question with him, and then we let him go.
Between the two factors, devaluation of the rupee tends to cause inflation, but commodity prices have also come down. Mr. Rajan is sitting around wrestling with the question of, is inflation going to go up by March 31st, and do I have to worry about that? Would you say that on balance, between the inflationary input of devaluation and the falling commodity prices, which of the two will turn out to be more important, and how will that influence Raja?
I'm speaking as an economist.
Yes.
I mean, there is no question in my mind that the period ahead is a period of disinflation/deflationary environment. Yeah. And I think we've made a fair amount of progress in dealing with inflation. I've written this as well. I mean, if you take the totality of price developments in India, if you compare everything, I think that also speaks to me not of a galloping inflation thing. And if you're forward looking, it seems to me that if you think that slowdown or recession, the balance of risks is very much in favor in terms of seeing deflation as a real challenge.
So a wise man will cut interest rates.
I mean, I didn't say that. That Swami said that. Swami is the wise man here. I'm just a petty technocrat here.
All right. Thanks very much, both you gentlemen, for talking to us. This brings a lot of perspective to our viewers on a crisis that is indeed in the making.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.